Hello traders, welcome. Today I want us to go through the setup that I had left running, a set and forget style that I had on gold, and this price came and tapped into this demand zone and it went all the way. It gave me 7.69 risk to reward, and the price continued up. So do I regret why I did not take the full profit at this zone? Hell no, I will not regret, because most of the time you'll find that price comes and tapped into this huge fair value gap and it reacts from it. So the market can do anything it wants to do. So it is good to get a part of the pie than expecting to eat the whole pie. Then eventually price can get to somewhere here or here, because this is a key level, and then to reverses. So it's good to know that at least there's liquidity to be targeted above, but always I normally exit at the internal liquidity levels. So without wasting much time, let us jump right into it. I show you exactly how I analyze the market and how I arrived at this entry and how I got this 1 to 7. Let's go after it. I will delete everything and show you exactly how I was thinking before taking this trade. First thing first, the market was on an uptrend on the 4-hour. Then we were very bullish, and I marked all the breaks of structures as the market was moving up. We had some sort of break of structure at the zone. We broke this structure towards the upside. Where is that break of structure? We retraced a little bit, and then after that we had another let's say this was a break of structure right here. Yes, we broke this structure here. After that we retraced back and we proceeded up. So you can see the market is still breaking structures to the upside. Hey, we broke this structure. Normally when I trade, I normally want to look at the very recent break of structure and wait for it to retrace. So once the price moves back to rebalance the levels, that is where I look for entry for my continuation. So now when this price left here, it went up straight and it did not retrace. This move was very long, and I was waiting for this market to retrace at least to 50% or at least come to tap to this level. So I started marking my levels where I expected this price to come to. So this was the fair value gap that I marked, and then I marked another fair value gap below here that I expected price to come into before anything can happen. So after that, I wanted to mark my PDRA and look to see if are these zones within the discounted zone. The answer is yes. We have two zones and both of them are within the discounted zone. So now number 2, we ask which zone is likely to hold. Either zone can hold depending on what the market wants to do at that particular zone. So price came back and tapped here. When it tapped here, I went to the lower time frame and I did not see anything. So I waited to see if this price wants to proceed down. I expected it to react from this level before it continues down to this point. Unfortunately, it never came back here. It proceeded down and then it tapped into this zone. So once price was at this zone, I was asking myself, now price has come to the 4-hour demand zone. What next? What next is we need to see structure supporting the movement, that now the move has changed from bearish to bullish. Now I delete everything here and then we remain with the demand zone, because that is where we are at the moment. So now I moved to 1H and tried to look at the structure to see on the 1H what can we see within this zone. So first of all, on the 1H, I found that we had an imbalance inside this zone. This was an imbalance that was left within the 4-hour demand zone. This was an imbalance that was left here. So price has come and tapped into this imbalance and filled the imbalance fully. So once the imbalance has been filled fully, that tells me price does not have any other business within this zone because the imbalance has been filled. So where does the market want to go? Definitely the market would want to continue up and take out this level. But now we have a very huge FEG around this zone that could make the price not to proceed up. Because if you mark the structure here, this looks like a sweep of liquidity. And then we had something close to a very aggressive change of character. Okay, so if we had this, the market is likely to come up and maybe mitigate this zone and then continue down. So the farthest point that we could want to exit at could be this candle that did what? That interacted with the liquidity. We call it point of interest. So this point of interest, unfortunately, does not have liquidity around it. Then what will happen? What will happen? Probably this level where we had a flip zone, price might tap into this zone and then proceed down. So we have 2 points of interest. One is extreme, one is this one. So we mark all of them. We mark all of them. Okay. After that, now we are down here. We are marking this so that we can know if we are looking to take our profit. Where are we aiming at? So having marked that, this becomes our point of interest also, because this is the gate pass to the fair value gap. The price must take out this level before it taps into the fair value gap, if I'm not wrong. Yeah. So that level had been mitigated. Liquidity. That level had been mitigated, but by the time this price is down here, it has not mitigated it already. So now I want us to look at it, but forget about this because the trade that I traded was this one. So now looking at this price action, the way it is looking, it does not show any break of structure, change of character and all that. I moved to 15 minutes to try and see what this price wanted to do. So on the 15 minutes, I asked myself, what is my last break of structure? Last break of structure happened at this point here. This was the last break of structure. So when the break of structure happens, this swing, the very last swing that led to a break of structure, if it is taken out, this is what gives us the change of character. Yes. This last swing that broke the structure, if it is taken out, it will give us change of character. Again, if the very last swing above here is taken out, then this one is going to give us a market structure shift. Change of character is a very early signal telling you the market might be changing direction, but the market structure shift confirms what change of character had shown you earlier on. All right. So now up to this point, we've had a change of character. This change of character was engineered from down here. Looking at this level, if you mark the internal structure, there was a sweep of liquidity at this zone here. This was a sweep of liquidity. And then we had an internal change of character. So now you see confluences are starting to align. So now this is the very last candle that interacted with the sweep of liquidity. I want to mark from the tip to the tip end, and then I will call this my demand zone. So once I call this my demand zone, this becomes my 15 minutes demand zone. Okay, now 15 minutes demand zone, I want to see how price is reacting from this 15 minutes demand zone. When price came here, what happened is we had some sort of break of structure towards the upper side. So now here the structure looks kinda funny, but when you go to the 5 minutes, because the time frame is 15 minutes, for you to see a cleaner structure, you need to move to a lower time frame, and that is 5 minutes. I went to the 5 minutes to mark the structure around the 15 minutes demand zone. Okay, so I came here and I was marking the structure. So I marked my sweep of liquidity around this zone. This was a sweep of liquidity. After this sweep of liquidity, we had a change of character right here. This was our change of character right here. After that, we had a market structure shift at this zone. We had what? Market structure shift. Sorry. We had a market structure shift at this zone. So we've had two confluences trying to tell us, look, the market is ready to go up. So once we had this change of character, the swing that came down here, it left some imbalance. So this swing was trying to tap into this fair value gap to gather momentum to go up. Okay, majority of the people will look at this and say the market was coming up, it paused here before it gave us a change of character. Maybe if they have marked this level as their change of character. But the change of character happened way before price came up to this zone. So now, if the change of character has happened, we are interested at this last candle that interacted with the liquidity. That is our key zone from the tip to the tip. This is where we are interested in. So this becomes our demand zone. This is our demand zone. So this is 5 minutes demand zone. But now, when you mark the 5 minutes demand zone, it is good to check what is the 15 minutes saying. If 15 minutes does not want to back this demand zone, then it means it could be a very low probability demand zone. So from there, I moved to 15 minutes again to try and see. On the 15 minutes, nothing much was being visible. So I said there's no problem. I'll move to 30 minutes and look at it to try and see what do I have on the 30 minutes. On the 30 minutes, we had this consolidation, but there is no imbalance and all that. Now, this proves to me that there was a consolidation before we moved up. All right. So if the higher time frame is showing me there is no imbalance, then that tells me price does not have any reason to come to rebalance anything. But on the 5 minutes, I've seen there's a demand zone. So what do? I went to these bodies because that is where consolidation happened on the higher time frame, which is 30 minutes, because 30 minutes does not have the wider version. It had the preferred, because if we had an imbalance here, we would have trusted it. Okay, so I marked it like that, and then coming here, I lowered this to this level to try and see, is there any commonality among this zone? I realized the market was reacting from 30 minutes demand zone. And then I looked to the left. I realized again, look at this. The market was reacting from 30 minutes demand zone. So that tells me the market is coming again to react from this zone. So that is the time I pulled my set tool. I put it like this. It gives me my entry and my stop loss. That's all I need. My stop loss will be here. So I looked at it. My stop loss was giving me 1303. I normally like whole numbers. So I went and then adjusted. That is 03. I don't like it. I will go 1300 flat. So I came to my entry price. I got, it was 46.10.63. So if it is 63, I go to 60 flat. Okay. So I went to my take profit. Now that we have had a change of character at this point, and this price had gone up. Which level was I targeting? I was targeting this liquidity zone simply because I knew this is the gate pass to the fair value gap that we have here. If the market will have to react, it must enter this fair value gap before it goes back. So this became my area of interest. This became my area of interest. So I wanted to take my full TP at this zone. Again, it gave me 47.1199. I went and adjusted to 47.1200. Okay, gave me 7.8. Right. So now after adjusting it like that, I disappeared from the charts. I waited for it either to take me out or to tap me in. So you can see price came, it tapped me in and then went up. At this zone, it took me out and gave me my profit. So there's two ways you can exit the market. You can exit the market either by you hitting the stop loss or by you hitting the take profit. So definitely this is how I got my 1:7.8 risk to reward on gold. And it is not like I was watching the market to, keep on saying it is London session, let us jump into the market, let us scalp 1 to 1, 1 to 3. Okay, this style is a bit slow, but it will help your psychology, because if you are to lose, you will just lose one trade. But if you are watching the market every time it is printing, you might end up trading 10 times and you lose 9 times out of the 10 you are trying to trade. So definitely this is how I normally do things, and I hope you have learned something. This is pure supply and demand and price action. The price action is what brought me all these profits. So if this is what you are interested in, remember to like the video, subscribe to the channel, and also comment below. Tell me what is your greatest takeaway and what would you want to see me cover next. So that brings me to the end of today's video. See you in the next one. Bye-bye.